The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And here's what's happening around here. The newest super typhoon is coming into the Philippines, and I was going to come back to the States this weekend, and this is just not looking like it's going to be a possibility now. Therefore, probably be doing the webinar, the big webinar Tuesday on December 9th from the Philippines and possibly Hong Kong, actually. I might be able to get there, but this is the way things work around here, and they should actually kind of let you know when you're not having a typhoon instead of when you're having a typhoon. I think there's been, Michael, 14 this year? 14 or 15? Yeah, so that's kind of interesting. And we're going to turn the camera off right now because I'm hearing that we're getting some flack here. So this is the picture if you're watching the den right now. And this is the path. And as you can see, Manila's dead in the path now. It was a little bit of an iffiness there of where this was going. But, you wonder why sometimes things happen the way they do, and oh my goodness, this place has gotten hammered lately. So a little shocking, changing some flights, and I'm sure there's going to be people sleeping at the airports around here, especially in some of the smaller ones, which won't get electricity for a week, more than likely. So that's just the way it goes, and here we go. So I want to reference the S&Ps first of all. And we want to look at this once again. We talked about opting out on some shorts yesterday, and I'm still in that same camp based on what you're seeing right now. And I don't want to beat it at horse, but this is kind of the barometer, if you will, speedometer, if you will, of what's going on with the breadth of the S&Ps. If you want to find out more about that in general, please come to that webinar on Tuesday, December 9th, and we're going to kind of go into some or as many details as we can within the time constraints to try to explain the possible power of what you just saw and how we've made it a little simple to look at and deal with. And nothing I've learned is a crystal ball when it comes to trading. You're trying to increase probabilities and possibly get an edge when you can, and that's all you can do. But as you look at these S&Ps, this unfair high or all-time highs, I guess we should call it, it's provided some trading opportunities, and yesterday we went as low as 61.25. Now let me kind of expand this up a little bit, and I'm going to go back into the 240s, and there's the 62 and a half area that we talked about yesterday. But forget all these short-term levels. I think you've got some historic moves going on right now. Obviously, I don't think that it's pretty self-evident. And when you talk about breadth being still positive and this crowding action up here, even though that was a 15-point pullback off those unfair highs, I think that's the risky trade. So we want to try to trade with the trend, and we also want to try to trade with the breadth, and we want to try to find trading opportunities. And reaching a low of 61.25 off of this, our unfair lows are at 20.59, coupled with those things that were in play around 60, 61, 62. So we got into the neighborhood down here. So the premise here with the breadth being positive is you're buying breakouts, especially closes above inflection points, and you're also buying support areas or pullbacks into inflection points. I know we've talked about that for a while, but I just wanted to, people that are missing the show, whatever, want to review that and also talk about how we're going to go into that as much as we can on Tuesday. So, what am I expecting? What do we do now? Not to be a Monday morning quarterback, on what's happened already, in my opinion, we're going to have breakouts of the S&Ps again. And if we do have pullbacks, you're still going to be looking to buy support on the S&Ps in general. So that's the situation on the S&Ps. Putin's been, throwing his dialogue around, throwing his weight around, however you want to look at it. And we're going to have somebody on that's intimately involved in Moscow on the second segment here today, and talk a little bit about the ramifications of that and what that means in the oil market and some other things that we're looking at. I pull this up all the time, but I got to pull this up again. Look at this yen. And the levels that we talked about were super important, 117.34 recently, a week or two ago, and how that's been the launching pad and staying above profiles. Now we don't have any, we talked about 120 being the targets. We've surpassed that. And the ability to regulate the trade, with this 120.04 unfair highs on our 240. When I'm in a trade, I was talking to somebody today. We got a pretty big fund manager from Tokyo still here. He's like, okay, John, I understand the strategies that you guys have built have been based around daily inflection points primarily. We use some weekly information in there. We use some navigator information in there. We use some percentage standard deviation information. There's a lot of things we use in the strategies, but what have you found to be the best way to regulate a trade up and to stop yourself out, or not stop, kind of trailing stop yourself out, I guess, of a profitable trade? It's really drilling down from the dailies into the 240s. The 60s are great, and they're actually great mechanisms in itself to trade like a red light, green light system, and I'll show you that in just a second. And the scanner actually can do that for you, and I'll show you in a little while how that works. But when we're talking about trading off daily inflection points, having the 240s kind of regulate the trade up or regulate the trade down, as you can see, here's the yen, and on the dailies we've been pretty long positive. Here's that kind of gathering motion that happened above that 117.34 area. And as we have, launching pad climbed higher here, we haven't broken below profiles or closed on 240 below profiles. Therefore, the 240s have kind of regulated the trade up, and you should literally still be in the intermediate version of this trade while letting the 240s and the 60s kind of barometrize the trade up here. So what I was speaking about the 60 while we're on that topic, here's the 60-minute on the end, and we've got something we call Vega, which is actually incorporated to the scanner, and I'm going to go into that in just a second. I'm going to pull it up, and I've got some, commodities. Actually, what do I have here? I don't know what I have there. We got the S&P 500, and we're looking at a sorting here. So let me clear that. Let me get rid of this, and now we're back to the S&P 500. So I'm looking in the 60-minute section. And let me do this. Let me just block out everything else. Daily, 240, weekly. I don't normally want to block all that out. Just for simplicity's sake, I'll just block that out. And what I want to do is look at the color-coded section of this. And if I'm trading stocks, as you can see, it's basically red, green, or yellow, or gray. And what does that mean? On a very short-term basis, and I'm just going to look at, let's look at Apple. That's a stock that's probably right up. Yep, it's right there. Let's pull up Apple, and this is the 60-minute kind of red light, green light version of the scanner on a chart. So what this does, I'm just going to look at the last couple of weeks here. So what this does is basically turn the scanner into a red light, green light, long or short. So here we have the green, color-coded, long, fair auction appearing, green again, long, fair auction, green again, long, a little bit of red there, green again, long, a decent red trade, short, greens, sideways, getting chopped up a little bit. That's just trading north, long, green, 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 and then the big red move down, which was a 7% move in Apple in 60 minutes. Is that what that was? 120 minutes. So what I'm trying to bring out here is the profiles. Again, on a short-term basis, you can trade breakouts or breakdowns based on whether we're above or below profiles. And what this does on a 60-minute, I'm pulling it up now in the den, and here's Apple, is right now, if you're doing that Vega long or short on the 60-minute, you're supposed to be short right now. So, and that's because, and let me see if this has got today's data. Nope, this is not trading yet. But as we open today, you'll be able to regulate the trade green or red with Vega. And this particular thing that you're looking at right now is how that is regulated. But if we put back in the other time frames, let's just say we want to see 60-minute above the box. So we want to see stocks that are on a 60-minute long situation, which is our short-term Vega up. And what that means is, as I'm showing all the multiple time frames, and let's just say I want to pick out a stock, and I can narrow it down to a certain basket of stocks to kind of monitor your personal portfolio, if you will. I'm going to look at Chubb, CB. Well, as of yesterday, this was like a super above profile kind of stock and zero reasons to be able to short it. That's the first thing I see. But I also see that I don't have any inflection points in the way here. I don't have any targets, and I need to let this trade more than likely breathe on the way up if I'm going to trade it on the 60-minute Vega fashion. And let me see if I can... We're having some connectivity issues right now here. Okay. All right. So we got it back. So as I look at Chubb Corp and I mouse over, I can see the inflection points. I can see we're above 103.51. And I can also see, as we are refreshing here, that I'm not anywhere near any other inflection points to stop this long type activity if I'm using that as a red light, green light system, if that makes sense. Okay. As we go to break here, just as a warning of what's going to happen in the next couple of segments, we're going to be looking at some currencies, and we're going to also be talking to someone who's intimately involved in the Russian-Moscow situation and what some of the higher-ups are thinking about Putin speeches and actions when we come back. So we'll be right back, folks. Hang in there.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And I think we have Edmundo Scatinas from Spain on the phone. Are you there, Eddie?
America.
Hello?
Yeah, I'm here, John. I'm here.
Hey. How are you today, buddy?
Well, like every day, John, enjoying my life here in Spain.
Okay. That's nice for everyone to hear. That's good. He's kind of gone into a whole new gear here, and sticking out his chest, Putin, that is. We got to talk about this. I mean, you're a Moscow traveler, and you're constantly communicating and rubbing shoulders with some of the guys in the know over there. What's the latest?
Yeah, three things happened just recently over these days. One thing is a 10 years yield of the Russian government bond jumped 56 basis points up to 11.72, John. 11.72. Remember 2 months ago we've been talking was 9.25. Percent annual rate is a coupon. Now 10 years, it's 11.72. That's amazing that the Russian, which is so much of natural resources, this is not a Portugal, this is not a Greece, this is not anybody like, or some other country. It's Russia. It can stand up with that. I think it's a free risk of free trade there to get those Russian government bonds. And I think that politically also correct, I would say so, because the Russians just recently bought short-term United States bonds and for $4.2 billion. Nobody actually says them anything, even though it's Cold War. So its investment is investment. 11.72 is good. Why it's good? Because a Russian ruble just hacked up to the 54 rubles per dollar, with the highs of the 57 rubles per dollar. What that means that the inflationary or devaluation of a ruble risk of the currency devaluation is kind of easing up, and we having the sort of free of hedge of the ruble deflation strategy right there. So, and the last thing I was going to tell you real quick is the last thing hey, my kids just arrived from school. Sorry about that, but, they're triplets if somebody wants to know. So I'm apologizing. So another thing, it was an annual speech yesterday from Putin. He just said about this. I didn't listen all, but what he just said, that he is pardoning everybody who stole, sort of, pumped it out, the currency out of the country, and he's pardoning unconditionally everybody who's going to bring currency back. So that's a key event. And I don't know how many people will listen, how many billions would, come back, but that's unconditional, and that's one-time opportunity, lifetime, and he offered that during that speech officially. That's official. Hey, bring your money back to Russia, and you're going to get pardoned unconditionally. No one asks a question. That's, no KGB, no Russian CIA, nobody. Just bring your money back. I think those things would be interesting for your listeners to hear.
They'll not get prosecuted or murdered as far as they know at this stage.
This is unconditional pardon, Johnny. Bring the money back. They need the money. Yeah, they're a little bit short on cash. Definitely, they short on cash, and Putin tries to, to do anything he can.
Right. Well, you've got some experience, and I've been kind of amazed at the process. But some of the folks there want to, pay their bills in non-rubles currencies like the euros and the Hong Kong dollars of the world or whatever. And I know you were telling me about a recent transaction that you were trying to deal with where, like a Latvian bank was doing an 8% clip spread at this stage to do the ruble euro changeover in physicals or in physical currency changeovers, so they could actually use a bank account in non-rubles to start paying bills. But that being said, how do you, it's great, 11.5% on a 10-year note. It's the Russians. They're not going under again, maybe. But how do you hedge that if you've got to pay a VIG like that to actually get it back out of rubles? You know what I mean? How do you overcome that? And I want you to think about that because we're going to break. We got about 10 seconds left here. And there's quite a few other questions that I've got about that. But think about that, and let's kind of talk about an answer, because you've been actually providing answers to that to some folks over there. We'll be right back, folks. Hang in there. We will go to a commercial and see you in a bit here.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Got Edmundus Katinas with us. And, Eddie, we got to take a look at the notes and the S&Ps here. You still with us?
I'm with you, John. I'm here.
Okay, great. Let's just, because we had a report come out, unemployment that is, and here's the note situation. We're kind of selling off below profiles. Don't know if this technical damage is going to keep happening. 126.06, current unfair lows on the daily. We've sold off, what is this? Almost a full handle here, right? Let me see. 126.10. And let's see. Not a full handle. It's kind of rallying back a little bit. Well, let's take a look at, just so guys are seeing this, here's the 60-minute on the notes. This is real-time quotes you're seeing. And when we go back to the S&Ps, let's just look at that situation. Kind of hanging in there. Came off a little bit. Let's just pull it up so folks can see it. This is the daily. Come off a little bit, meaning came off. Wow, we're 5 S&P points off of all-time highs, Eddie. That's a heck of a pullback. Just wanted to update you guys after the report. The notes are caving in just a little bit. Eddie, can we get back into that Russian thing?
Yeah, sure, Johnny. About? What do you want to know?
Okay. So what I was asking was, the notes were, as you were talking about, the 10-year note equivalent in the Russian Treasury. We're talking about, the currency swap conversion at about 8% at that Latvian bank that you were dealing with. How do you take advantage of something like that? How do you go in there and hedge off some of the risk of buying a Russian note and holding it that long? I mean, how do you even get into that, or do you not get into that?
No, you're not getting into that, John. This is considered to be so-called shady, not shady per se, not black market, but a little bit the gray market. Frankly, I have no idea why many Russian companies which buys some components or import some goods and then resells them in Russian rubles and buys those components or goods abroad, primarily from China, and from other, of course, Asian countries and many European countries. I have no idea why they're trying to get these transactions sort of below the radar. Why? Because I'm guessing because Russian taxes are not that high in comparison to the other European countries, even the Western type of countries. It's in the range of the 11% taxes. So I truly don't know the reasons why the many companies are trying to do what they're doing. Those percentages, 11 points or whatever, this is like conversion rate, because it's supposedly any transaction abroad is supposedly falling under the currency transaction laws, and therefore a central bank has to approve every transaction. I believe so because of the massive bureaucracy, and then it's leading to technical possible bribes, and those bribes probably cost them more than to get the stuff done under the table, even though the companies are some legitimate. As far as legitimate investor for those legitimate reasons, like for those transactions, the foreign investor into the currencies, into the investment into Russia, investment into the any papers, commercial papers, and ГКОs, it's so-called государственные облигации страны. If somebody wants to hear Russian without accent, right? I'm fluent in Russian as well. So anyhow, those transactions are, of course, legitimate transactions. They cost typical normal banking rate transactions. They are not that subjected to that. Therefore, this opportunity to get nearly 12% of the 10 years of Russian government bonds without the likely risk on the Russian ruble, because the Russian ruble devaluated so much. Right now, in June, it was 33 rubles per dollar. Today is 54 rubles per dollar. It's 18% devaluation decline against the dollar. So the risks are diminishing and percentages are, I still think, technically, if you just simply don't show that to your users, but if you apply our profiles on the daily and weekly Russian government bonds, there's still some room. There is no reason to sell now, but of course to put that on the radar. 12% is not bad from the government. It's not a corporate, bond. It's a government bond. And with the whole resources, Russia likely will not fail, and the way they're dealing with that, But it will become worse and become better. Therefore, we can see likely, and the locals are talking like about 13% of the 10 years probably we're going to hit. So there is some opportunities in there, maybe to get neither technical or fundamentally, probably too early, but to need to put on the radar in order to actually, it's a good solid deal, in my opinion.
Right. Right. Well, let's can we kind of migrate away from there and take a look at some things that are moving here based on this unemployment report? I've got gold up right now. This is the daily. I don't know if you see this. 1198 was kind of that, major inflection point up there. Now we're kind of, with the noise factor, we were kind of looking like we were on the launching pad here, and the unemployment report kind of dashed my hopes in particular. I was pretty longish on gold, and that's what stops are for. And this is going a little bit farther down below 1198 than I'd want to try to fathom taking that as just a noise factor. So what's your you have any thoughts on gold here? I want to pull up some technicals. Here's the situation.
Along with you, John, I was long on gold after this long energy bar on the December 2nd on the gold. As far as the silver confirmed that bar, which is closed on highs and was outside bar and closed on highs. Now gold is closing above weekly lows, which is 1169, and that I will probably go deal with the weekly distribution or profile. It means 1179 is the support area, and 1181 is a point of control, and you and I know that weekly that matters a lot. So the supports are long-term 1181, 1169 for the gold, and I'm still bullish on the thing because both weekly and daily new distribution values showed up, and I think there's a little bit of extra noise that price gets inside the profile on a daily, and this profile is a little bit wider, if you might note, wider than other profiles, so suggesting a little bit extra volatility on gold. So coming back again, 1191, 1180, those are support from weeklies, and I would be buyer down there.
Okay. All right. So you're still bullish on gold like I am, but it might be time to just kind of sit tight since the 1198 didn't hold, and we may be able to pick about a little bit lower, and then also be able to buy the breakouts above the 1198 again. We've got this 1218 weekly, which remember these weeklies are super powerful, and the most powerful part of the breadth equation on the S&P breadth is based around the weeklies in our opinion. So remember weeklies, as we always talk about, Eddie, weeklies take precedence over dailies, over 240s, over 60 on down the line. And, gold reached somewhat of a target. 1221 were the highs this week, and we've got 1218, 1219 as the weekly major unfair high inflection point on the current profile. So what does this all mean? It means now we're right smack dab, kind of back in the middle of that weekly profile, and on the dailies we're kind of breaking below back into the fair auction. So we need to get some momentum back above 1198, and hopefully we can get back into 1218 and even higher. But right now we're kind of in no man's land a little bit, and we need a little bit more of a pullback in gold to start buying support again. So I want to pull up silver. A lot of guys trade silver. This has kind of been we had a pretty good reversal the other day, as we talked about. We've got a relatively thin profile here, and just like we were tracking, let me see if I can pull that up. Okay, this is March silver. Should we be looking at March silver? Is that the contract we should be looking at, March silver? Okay. Got a pretty thin profile. Just to give you some numbers for support and resistance on the current fair auction. 1608 and 1675 up at the top, and that's that's the numbers that we have on our current profile for silver if you're trading March. Okay, so let's go back to some currencies, Eddie, other than the ruble, if that's okay with you. Obviously, the euro is going to be weakened by some of the strength of that report that just came out today, being that the unemployment numbers are relatively good in the United States, which is causing the bonds to sell off, rates to go higher, and therefore the euro to come off some. Again, we had an inflection point, 124.33 with some noise factored in yesterday, reached a high of 124.50 something. But remember, folks, when we didn't have a close above there, get back into the fair auction, a close into the fair auction, we kind of went up in there. That was a little bit too much pain for some folks to trade against that intermediate level, which we talked about. We had hoped that we get back there to kind of kiss that for a high probability short, but we got back down below it intraday and closed below it, and that was relatively bearish after the action yesterday. Eddie, got any targets in your mind on the euro or feelings?
First of all, before speak about the targets, I would like to speak about this profile distribution which you just pointed.
Right.
124.56 on euro and 124.32 on euro. it is a profile lows and profile point of controls. And those are asymmetrical. As you can see, if viewers, those viewers were not listening only, but are also viewing your charts, you see that unequal distribution, sort of in blue line point of control, supposedly, normally, typically is in more or less in the middle between even distance between the unfair highs and unfair lows. And this time, it's very close to unfair lows. Therefore, I would expect that with the extra volatility, that this level from 24.32 to 24.56 could be the area of resistance. And the longs could have actually, or shorts could have held a little bit because this currency is doomed. It's hey, just give me a chance. So I'll short it. Yesterday was a chance. From 124.32 to 124.56, yes, was a gift, actually, of the textbook case scenario of trading profiles. That means price broke below 4 sessions ago below profile, which is 124.32, stayed there, and we had a shot back into the 124.32 area. I would be short, and I would probably disagree with you saying that a little bit of heat here that the guys shorted 24.32, so 30 pips. It's a typical, probably you got to get to some institutional traders, banks, if they're talking about longer-term investment, longer-term directional trades, they give 60 to 80 pips, sometimes even 100 pips, one handle to the currency stops. So 30 pips was not a big deal right there. So this was a gift. This bounce for the Europe into the 24, into our profile lows, it was a gift. Therefore, that's a clear, nice trade. I hope would happen that, because why it is a gift? Because sometimes currency is weak. When they break profiles, you never had a chance that currency bounces that high into profiles. It keeps going lower, and lower. One more thing, if price is not going lower during the next week, that means this box will get probably penetrated, go back, because one condition is clear. Price has to go away from profiles when it went below profiles. When it's vertical, when it's out of the balance, it has to move. If price will not move, that price probably will likely go above 32.30 and then maybe 25.60, right? 25.97, I'm sorry, which is top of the profile. But that would be another gift, but we have a clear picture here where the resistances are and where supports are. As far as the targets, John, I'm sorry I did not look at it. Typically, the first target is witness of the profile itself, adding that size of the profile witness to the lower end of the profile. It's the top of the profile, 125.97, low of the profile, 124.32. It's 165 pips. 165 pips minus from 124.32, that would be the target.
Well, the reason I'm asking about targets is I'm trying to figure out at what time should I go over to Europe and see you, because I want obviously I want to get the best bang for the buck. So anyway, we're going to get to another break here, folks, in about 30 seconds. And look at the yen. Oh, my God, it's past 121. Gee, ooh. My goodness.
That's another easy trade, John. Yen, ruble, and euro.
I know. We've been talking about it for so long. I think the listeners are tired of me talking about it, actually. Let's take a look at the Australian dollar when we come back, because this was one of my things I don't think that were on people's radar screens enough, and that's just developing so well on the short side. All right, guys, we'll be right back, and we'll get into a couple more currencies, and hopefully Eddie will stay with us. Thanks, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades remains open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Showing the Australian dollar right now. We've got Mundus Katinas on with us. Again, I think the gift that keeps on giving. There's been not a lot of reasons. When we talked about ignoring some of the divergence that was happening down here, and now it's turning into not a divergence because of the overhanging fundamental things that I think are out there, and being able to just hang on to these shorts from the 87.26 area. Here's the 240 situation on the Australian dollar, kind of using this to regulate down. We had a little bit of disturbance there, but that's the way trading goes. If you're going to have to attempt at some point to try to kind of trail stop yourself out, those are the areas you need to do them. So here's, let's see if I can get this come back up. As you guys have known, and Eddie, we talk about things before the show all the time, been relatively bullish on the notes. Let's pull up the 10-year one more time. And this was the latest action on the 10-year. We caught some good long trades above that 125. Well, actually, this is the March contract, excuse me, around that 126.0102 area. And then we had a new profile up here. We kind of had the orange bar, which was indicating that we're going to have a new balance area. What's your thought on the notes right now, just by looking at the daily situation?
I'm combining two profiles. One profile that been started at November, and the last profile. I'm combining them too. So I'm having the corridor right now, or corridor or range 121, 120. John, what's 126, right? 126.23. 127, 127 even. That's top of the profile, and bottom of the profile would be live profiles. Shame that you removed the charts, John. You changed into the market bread.
Actually, what I'm doing, Eddie, is I'm trying to get the scanner up so people can see these levels as I mouse over them.
Of course. That would be even better and easier to
exactly. Yeah.
Analyze.
It's kind of baked in the cake here, guys. And as you can see, we're below profiles on the daily below here, but it also gives the inflection points to leverage off of. And here's the 60. So, again, the weekly is pretty wide situation on the March contract, 124. These are decimalized, so you're going to have to kind of convert those into 30 seconds.
You know what I love it, John? More, I love it, the landscape. If you click on the landscape, that would be all four profiles, time frames on the same page.
Yeah. Here we go. I forgot about that. So, it's a great way to look at things. It's a great way to kind of get a bird's eye view of what's going on and get all your inflection points and numbers. I mean, this is kind of cool. And you can also, print this out. You can download it into a PNG and all that kind of jazz and just tape it on the wall. If it's something you don't want to reference back again, you can pretty much get all the inflection points here in one quick view and expand it out and print this. So it's kind of a handy little feature in here. So let's take a look. We got about 30 seconds left, Eddie. S&Ps. None of the market hasn't opened, but rest still looking very positive. And let's reference. So the notes, we got to kind of be out of the notes right now, technically speaking, on the intermediate time frame, which is what I'm looking at the most. And let's just take a look at the S&P. So after the unemployment report, we've got about 10 seconds, Eddie. We've got still crowding these unfair highs, and I guess we've talked about a pop here, and it may happen now. Thanks for being on, buddy.
Thanks for having me, John. And I'll tell you a little bit jokes, which is circulates in Russia right now. Say ruble, oil, and Putin all going to 63.
I like it. We'll see you again Monday. And get ready for that webinar on Tuesday. Steve Rhodes is next, guys. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.